big time. That's why I hate index funds. Here's my thesis on this. Like, honestly, if you want to invest in index funds, I do not have a problem with that. As you said, a lot of people are lazy. They're great if you're lazy.
Yep.
But please do not come to me and try to educate me on why index funds are the answer. Because for reasons that I've just laid out that go beyond making money, it's how you want to live your life. It's how you want your impact to be felt in this world.
Yep.
You ready?
Yep.
All right, what's up, everyone? We are back with our first ever episode, inaugural episode of, now to your question.
Yeah, what are we gonna call this?
I got something. I got something, you tell me what you think.
Go for it.
But it's totally fitting and you didn't prepare for this. Hot talk.
Love it. Because I was thinking icy thought, hot topics. But it was too many words.
Yeah,
so that's perfect.
Yeah.
Hot talk.
So the problem is, I want it to be hot talk with the icy hot stuntas, but then it's kind of like redundant.
Yeah.
Anyway, hot talk.
Hot
I like
talk
hot
works.
talk. Okay, so this is very similar to what we have done in the past with our shoe-offs, where I come prepared and I hit this guy with something straight out of the cold, so he has no idea what to expect. Now, here's the thing. We did a video about ZadehKicks, and we got some really positive feedback from one person. So I'm going to share that here, because it's the reason, in part, that we're here tonight. All right, are you ready for this glowing praise? A viewer commented on our last video that really was sort of like a podcast. It was just basically us shooting the shit. Very happy to support you, man. Really like this video and would really like more long-form free discussion videos like this about Zadeh or whatever in the future. Now here's the thing.
Who's that from?
I'm not going to read the name. Okay. I don't want to throw anyone under the bus, even though it's a public comment.
Okay.
We appreciate you. That was an amazing comment, because here's the thing. This is something that we've wanted to bottle up, because this is our normal Saturday night. We're here talking to each other about things we find interesting in front of a fire every Saturday night.
Every Saturday.
So if people are interested in this content, it's perfect. And I think there's some magic to our discussions, so if we can somehow bottle this and share it, that would be amazing.
Yeah, and if anybody out there has topics, let us know.
All right, you ready for this one?
Let him know, because I'll find out when we record.
Are you ready for this one?
Let's do it.
All right, so the topic tonight, you've heard of FUD, fear, uncertainty, and doubt.
Yep.
I don't want this to be about FUD, because you know me, I'm always a glass half full, glass 10th full. I'm always seeing the positive side of things. I always have a positive outlook no matter how crazy things get. So the topic tonight is fear, because there's a lot of fear in the markets right now.
Yep.
Greed, because quite frankly, everyone was greedy right up into this, which is why so many people have been so impacted.
Yep.
And uncertainty, because I think that's really what everyone is feeling right now. So, context, big picture, we have the stock markets kind of imploding. We have the crypto markets.
Has imploded.
Definitely imploding. It's June, is it 17 or 18?
17th.
June 17, 2022. Crypto markets, Bitcoin, what, 17,000?
Yeah, and I saw ETH dipped below 1,000 for the first time in a while.
So Ethereum, which was what, like 4,000 at peak?
Yep.
2,000 when I bought the McLaren NFTs is now $1,000. So we're gonna get into that.
Okay.
So let's see, stocks, crypto, inflation through the roof. I just filled up my gas tank that used to be $60 to $70 is now $150 to fill up.
Yep.
What else do we got? Interest rates rising. So we got inflation, and then we got trying to combat inflation, but it's really just gonna hurt us on the flip side, because anybody that has a loan needs to take out a loan, has revolving credit, everything's going up. Like I have a HELOC,
and that
interest rate is gonna rise as a result.
In the past 2 years, it's risen a few points, minimum.
Oh, they just raised it 0.75% this week.
3/4 of a point this week. Yep.
Right. Yeah. So
I mean, so real estate's up and coming next. I mean, I think when we
yes.
Okay.
Yes. Okay. So the topics we're going to hit: stocks, crypto, interest rates, inflation, and real estate. Yes. But before we get into it, okay, two things. Sorry, there's a streaming.
He's been bottling this up. You can tell.
Well, I mean, this is what happens.
Yep.
So we're gonna bottle what happens, right? Which is I just talk, and then we talk, and it just goes on. So this might be a long video. The one thing I will tell you, I will do very minimal edits. I'm not gonna polish this. I'm just, if I'm looking for something on my phone or something, I won't make you guys wait for it.
Right.
I already lost my train of thought. What were we talking about?
Crypto. That was number one.
No. Oh, I know what it was. Zadeh. All right. Quick ZadehKicks update.
Yep.
Because a lot of people are tuning in for ZadehKicks. I got two things to say. One, I spoke with the CEO of NiceKicks, Matt Halfhill, for about an hour and a half. He wrote an amazing article that to me was the most comprehensive and accurate depiction in a written form of what has taken place. So he shared that, and I caught a quote in his piece. I mean, like, I'm not famous, and nobody knows it was me because he didn't say my name, but I'm gonna read the quote related to me in this article because I do want to discuss the point. Okay, in his article he said, some pre-orders arrived quickly, though it depended on several factors. Quote, it wasn't just in the beginning that I received my items quickly or when I had smaller orders, but it was also when my pre-order price that I paid was well above the market price when the shoes came out, said a regular ZadehKicks customer since 2020 who is owed over $25,000. You know the first video I did?
Yep.
I confirmed with him that he was talking about me, and that is what I told him. And the reason I told him that is because I think one of the smoking guns for when he started having issues is going to be looking at the delivery dates of my orders and seeing when the last one came in that was worth more on the open market than what I had paid. Because the trophy rooms were worth more, the Union Jordan 4s were worth more, but there became a point where I started only getting the items that were cheaper on StockX than what I had given him. And I think that's actually a huge warning flag, as people would say, he was only sending you bricks.
Yeah.
Once he started only sending people bricks, I think he was in financial trouble.
Yep.
So
that's exactly where my head went. The minute he veered off from his value is the first sign of trouble.
Right.
Any business.
Right. And that started happening well before everything blew up.
Right.
I'd have to look to find the exact date, but to me it felt a good 6 to 9 months before shit hit the fan.
Yeah.
So the other thing I want to say, just so that people are aware, and this is very odd, fingers crossed that this holds up, but Chase has refunded all $25,000 less, this is super weird, $330. They sent me letters that said they've credited my account for all of the transactions, and they listed all of them except for one. And then they sent me a different letter and they said, for this one transaction, we have determined that while you may not have received your goods, it was placed so long ago that we're deeming this transaction to be valid and you will not be getting your money back. That was a transaction that I believe was in November of 2020. And quite honestly, I'm incredibly ecstatic with that result because, as you know, I just wrote everything off right from the start. Anything I could recoup would be a positive for me. And so I got like 99% of the way there, right? But I'm wondering in my head, why did they do this? Because they have a customer, they could have just kicked another $330 and kept, 100% satisfied.
Right.
But there's a bigger picture in place. So is it they looked at each transaction completely in a vacuum and I just got super lucky that the window of time going back, they just decided to fulfill? But if I had more, they wouldn't have? I don't know. I know a lot of people are getting mixed reactions. The downside for this is very clear, that they're not going to honor
100%
transactions that potentially could be older, which I'm sure a lot of people have funds in as well. But I do want to put that data point out there for those who are watching.
Hopefully that's helpful, and hopefully a lot of other people can get a majority of their money back. So I'm happy for you there.
yeah, no, I'm very happy too. So this is what's funny, and it's really weird that my mind thinks like this, but you know how my mind thinks with everything going in the gutter. I mean, nothing in terms of things I would consider assets of value that's not US dollars. Everything that I have has gone down significantly.
Yep.
Except I purchased these shoes and now I just got refunded the full amount. I'm like, dude, I just hit pay dirt because now I can purchase other assets that are completely depleted with money that basically was like in a savings account from before, even though it went in this super effed up manner back into my hands.
Well, that's a nice segue into the topic of the night, because hopefully others watching this video, you're getting some money back. And I think there's two things. You can't dwell on the past, and it's what are you going to do with that in the future? If you're given a second chance, how are you going to make the most, or how is one going to make the most of it?
Right. So, to our way of thinking, anybody who's watched Stranger Things,
yep,
this is how our minds work. We both watched Stranger Things, and our wife was basically like, what is the villain?
Vecna?
Vecna. Vecna's super effed up. Yeah, he was. He's like, he looks terrible, he's killing people. But then we find out, spoiler alert, if you watch Stranger Things and you haven't seen it yet,
don't watch.
Fast forward through this chapter. He makes a speech. We find out that he's won. He is the first test subject. Yep. And he makes a speech to 11. And my wife and his wife were both like, this guy's effed up. But I was like, yo, that speech was on point.
It was very much on point.
So I got it. I got it here. I found it. And I'm not going to read the whole thing. I'm not going to read the effed up bits because, you know, he kind of bookends it with some messed up reasons why he wants to kill everyone. But the middle of it, the heart of it, was really good. Okay, are you ready?
I'm ready.
All right, here he goes. You see, humans are a unique type of pest, multiplying and poisoning our world, all while enforcing a structure of their own, a deeply unnatural structure. Where others saw order, I saw a straitjacket, a cruel, oppressive world dictated by made-up rules. Seconds, minutes, hours, days, weeks, months, years, decades. Each life a faded, lesser copy of the one before. Wake up, eat, work, sleep, reproduce, and die. Everyone is just waiting for it all to be over, all while performing in a silly, terrible play day after day. I could not do that. I could not close off my mind and join in the madness. I could not pretend, and I realized I didn't have to. I could make my own rules. I could restore balance to a broken world. I'm gonna tell you guys, this guy has cracked the meaning of life. Like, in a nutshell, the villain to me became the hero because he was spot on in everything that he said there.
He was spot on all of the facts. Now, what I see there is a very misguided gentleman. At the same time, the facts that he pointed out are very much true.
All right, so I'm going to go on a tangent here. Even though we're talking about money, I'm going to do something that an old coworker of mine did to me. And it was in the most normal setting. We were sitting outside at patio tables on a beautiful day, beautiful California day at work. And he and I think a lot alike about life as well. And he says, yo, Brian, just bear with me for a minute. Take 30 seconds, listen to what I have to say. Erase everything you're thinking about. Open your eyes and look around at the world. Look at what you see. Look at those trees, look at the sun, look at the atmosphere, look at everything that's here. I'm not religious by any means. But where did this all come from and how did you get here? And think about how all of this came to be and how the possibilities are completely limitless. But what are you doing every day? What is your 9 to 5? Get a career after college and work until you retire? What's the purpose? Why are you bounded in that box? You don't have to be. You could literally do anything you want in this entire world, but humans create this structure that keeps people in a box, and very few people stop to think, wait a second, who made these rules?
Yeah, it's interesting. So I see a beauty in those facts. So if I combined what your colleague said with what Vecna said in that speech, this is where I do believe alone, what are we doing, right? These rules that we live by, they're very much arbitrary in the sense that 99% of people follow them. There's always that 1% that doesn't. Now, the beauty in it lies in whether or not that one, well, the beauty lies in the 99% working together towards a goal. So anybody that works for a large corporation, hopefully you're there not because A, you need a paycheck. I'm sure those are all those reasons, but the company vision is like, no, I'm making a difference, right?
Yes.
There's a bit of that, and I think that's what people need to key into. And if there's a message people got out of this is no one can do it alone, because then you'll be misguided like Vecna. And it's really, time is the one asset you can't get back. Use it wisely.
So here's a great segue into now the finance side of things.
Okay.
Because this is something that honestly gets under my skin to no end. And I've seen it. It's a middle class school of thought, and it goes something like this. The only acceptable equities asset for you to put your money into is an index fund. And if you tell me otherwise, if you try to put it into a stock or a handful of stocks, you're taking on unacceptable, undue risk. Put it into an index fund. I know better than you. I swear to God, you have no idea how many people I've run into that pitch me that concept, and I don't even know how to fix their thinking because I'm so far past that for so many reasons. But one of them is what you just said, and really, I think this is kind of the most important because your life is your life. You only get one. You're not getting the time back.
Yep.
And you're talking about investing your life savings. Are you really just doing it to see a number on a piece of paper grow? If anything this bear market teaches anyone, it's to realize that all that bullshit that people work for that they think is of value to them can get taken away just like that. So you need something more. You need a greater reason to do what you're doing. You're talking about investing your life savings. I have a fundamental belief this world moves on money and the decisions that people make with money.
That is true.
So, what if, instead of just throwing your money into an index fund, I mean, I'll give you a little bit of insight into how I operate. I only ever pick a handful of companies. For those companies, I view the fact that as a retail investor, you can buy into them via the stock as an unfortunate element. Because in the areas that I invest, biotech being one, the volatility will kill you. I mean, it's absolutely nuts. 50% up, 50% down. It's purely the macroeconomics of it.
Yep.
But I do deep due diligence on the companies I invest in to the point that with every PR that comes out, I don't need to read an analyst report. I know exactly what the details from the company mean to my fundamental investment thesis. We're talking investments that run over a decade to the point that I have personal relationships with the CEO, and it's not like he's going to disclose anything that he shouldn't, but that's kind of the depth of the due diligence that I do.
So,
and it's in companies that I believe are going to change the world fundamentally in ways that we can't even imagine right now. which gives purpose to that money where, I'm not gonna lie, so you probably, I don't know if you pay attention to the biotech market. The biotech market is experiencing one of the biggest bear, I don't know, markets raids that it's seen like ever. In terms of the duration, it's the longest one that's ever happened. In terms of the severity, right now I believe 25% of the entire biotech, like small cap companies, are trading beneath cash value.
Oh, weird.
It's concerning because they need funding to keep going.
Yep.
So many will die, but the ones that have fundamental value because they have drugs that will get to market become steals. And I've been here before, and so I'm down north of 7 figures in my biotech investments, but I'm excited because I'm still making money with my paycheck. And now every paycheck that I have is going 4 times as far as it used to at the peak. And I'm just accumulating as much as I can.
2 things I heard from what you said. Number 1, with those index funds, because we get pitched that all the time, and usually anybody saying that is selling a product, or what you may deem is they're not doing the due diligence. And I say there's 2 reasons to not be happy in life. You're either lazy or you're stupid. There's plenty of reasons out there, and to each their own. 99% of the people out there are lazy. But I will say this. The second thing I heard was you did the due diligence, you bet on yourself. So just like me, I invest in businesses, I invest in people, but I'm also very much hands-on. Any day of the week, I will bet on myself. In your case, you're betting on yourself because you're betting on the time and effort and research you put in. And I think in this bear market, that's what people need to be doing, because I'm sure everybody's heard all through 2021, look at my portfolio. I got lucky in Bitcoin, rode it to 65 or 67, whatever it topped out at, but where are they now? So hopefully they did something with it, but did they get lucky, or did they have a thesis, and did they bet on themselves? So I don't think you can go wrong with either of those, because I'm 100% with you. Now is the time. It's a downturn. I remember in 2006, that 2006 crash, we have a condo, we have a condo in the city, and we bought it at 700, and I think it bottomed out at 4. Calm down, everybody around us, crapping bricks, trying to get out of it. I was like, this is going to come back. We're fine. Leave this alone. Do you throw good money after bad? Or do you just continue to use that wisely? So granted, now we're 14 years later, that condo is up probably 120% from what we bought it from. So it's about just where, like, whatever the term is, we just have to make this last. This will go. It may last 2 years, it may last 4. I was talking to somebody yesterday that thought, you know what, it'll bounce back within 12 months. I personally don't believe that, but it will bounce back.
So, right. So just to kind of close out on the previous thought, if you're making money, if you have a day job, you have income coming in that for the most part is steady. Your paychecks are consistent.
Yeah.
So in general, I mean, this is silver lining stuff, right? I mean, on paper, I've lost a lot of money, but here's the thing. As far as I'm concerned, the assets that I hold haven't gone anywhere. I keep getting more and more shares of the companies that I own. So if you've got 10 years more in your career, 20 years more in your career, however long, I mean, I'm trying to get out as fast as I can, but for most people who plan to work a long career, you don't want to be purchasing consistently every paycheck assets at their peak prices. You want to be purchasing them at their absolute bottoms.
Yep.
And that's the opportunity on offer here. So in terms of my personal finances, I'm aggressively trying to cut spending in the sense that you know, when everything's expensive, it's kind of like, I can buy this jacket. It doesn't matter. And I know I just bought this jacket, but hey, I got it half price. I'm trying to make sure that now the assets go into the investments that are abnormally low.
Yep.
Because I view that as every dollar I put in, I'm taking 10 out on the other side.
Yeah.
So,
money is on growth.
Housing. You touched on housing.
Yep.
I'm not gonna lie. This is the first time ever that I'm looking at housing and I'm going, I should sell my house. There's so many reasons to keep your house, especially in California, because you have Prop 13 that locks in your property tax basis. And if I were to just trade sideways, I would go from paying $20,000 in property tax a year to probably $45,000, $50,000.
Yep.
I don't want to do that, but at the same time, I kind of feel like everything went from its peak, all the expendable income dried up, housing is the last thing that's still at its peak, and there's nowhere for it to go but down.
I've also heard that one before. So I agree that housing is not safe right now. It's really interesting. I may have touched this on the last video. If I did, I apologize. But I heard it and I've been repeating it because it actually rings so true. Nothing is safe right now. Nothing is safe. Stocks, crypto, bonds aren't safe. I mean, the only thing that was safe in the 6 months that's been 2022 is US dollar, which history says has been the worst thing to keep.
Yeah, I was gonna say.
Right? It's the worst thing to keep.
I still refuse to sit on it. I'm not gonna lie.
I'm not gonna sit on cash. Yeah, no. There's no growth opportunity. So my take, you sit on cash, it's safe right now, but there's opportunity cost. So what is, so where do you put it? And it's all about growth, right? For those that don't know this, when stocks go up or down, it's based on future expectation on their growth or lack thereof if it goes down. It has nothing to do with what they did in the past. And I think a lot of people don't realize that. They say, hey, I'm gonna buy this stock, they had a record year. But if their outlook says, hey, we're cutting it 50%, you're gonna see that stock drop 33%. Guaranteed. So that's where I 100% agree with you. There's opportunity. Most people don't have access to it. And this is where I think the beauty of technology has really opened it up. Retail investor. When we saw what happened last year with GameStop and AMC, you rarely see stuff like that from the average Joes like us. But there are not GameStop and AMC, there are opportunities, value-based opportunities out there that are long-term.
So that's a great point of discussion because I do want to bring this up. The thing about stocks, because I've gotten lucky with stocks and now I don't consider it luck anymore. Luck always factors in. All right, I'll say this. First to start, when it comes to stocks, especially the stocks I invest in, the volatility of the stock market, and it's being apparent even now with the largest companies in the world, the volatility of the stock market from a macroeconomic perspective can swing things up and down 50%.
Yep.
Easy. And honestly, I'd like to tell you my crystal ball broke long ago. Everyone thinks, I think I'm a great investor, but I'll tell you why. It's not because I have a crystal ball. The crystal ball broke. It's that any money I put in, I expect not to need to take it back out for at least 10 years. And I'm patient, and I watch everything progress, and I invest for fundamentals. So I expect that in my best investments, I'll get maybe 2 opportunities over a 10-year window where all the stars align, where the fundamentals align, the macroeconomic conditions align, and you can get out at the absolute peak.
Yep.
Now here's the thing, I'm terrible at calling it. I know when it happens, I see it, I know it in hindsight. I'm great at picking the bottom. I'm fantastic at picking the bottom. I'm a bargain shopper. I'm terrible at calling the peaks, but I did right by crypto. The crypto bear markets have been so devastating that even when I invest for fundamentals, I told you when things were hot, right? You remember this.
I remember this.
I said, as much as I love crypto long term for the ones that I like, because I believe they're developing technology that
and
will
utility.
be fundamentally useful to people, and that's what it's all about, delivering value. The last crypto bear markets were so bad that I refused to hold anything going into the next crypto bear market.
Yep.
You agree I said that like months ago?
You said that months ago.
So that's part of why I sunk everything into the McLaren NFTs, because quite honestly, like, I'm just riding this one out. But I don't think crypto is done putting a bottom in. I honestly don't think it's even close. I kind of feel like you're going to see numbers that hurt. Like if you're invested in this...
We're already seeing numbers that hurt.
It's not there yet.
No, it's still going, but they already hurt. So
and I don't even think I would target a dollar value. I think the way that I'm going to play this, because I want to buy the bottom. I mean, that's been clear. You aggressively buy the bottom over an extended period of time, you're going to make out like a bandit. But if you start buying now, you're buying too early. You're catching the falling knife.
Yeah.
I think, regardless of hard numbers, if you wait for it to just continue to drop, settle, and you see, depending on how aggressive you want to be, 100% bounce back might still be might still be a lower entry point than purchasing right now.
Yep.
You can be more aggressive. You could say a 50% rebound and I'm going to buy. You could be more aggressive and say a 25% rebound I'm going to buy. 25% might not be enough, where it might still drop after that. Mm-hmm. I kind of think my number in my head, because I was heavily invested in Cardano, ADA. I purchased it originally between 30 cents and $1 back in 2018.
Dropped to a nickel?
I watched it drop to 3 cents.
Cents.
And then run up to $3. That's 100x return in like a 2-year window.
Yeah. So
I'm gonna call it. I don't think 3 is in the cards, but I do think sub 20 cents is in the cards, maybe 10. And around that price point is where I'm gonna start kicking in paychecks regularly.
Yeah. So it's interesting, right? Everybody tries to catch the bottom of the hockey stick and ride the way up. What I've kind of learned is, if you're getting it on the way down or getting on the way up, knowing where you think it's going to end up, and this is actually something that rings true. When I talk to most people, they're asking me questions, whatever it may be, I realize most people, from their questions, I gather they don't know what they want. And what I mean by that is, they can't be specific on the outcome. So in that case, any bet they make is as good as a roulette table. The past doesn't affect the future. You have 1 of 36 with a 0 or a 00. That being said, I know you, I know myself. We believe this is going to rebound. We have an idea of levels it's going to rebound as it pertains to where things are today. And we're just trying to create value, so we have a number where we want to get it. We may get it on the bottom of the hockey stick, get it on the way up, but there's a range towards the bottom where we're going to hit. And we're doing that because we see value somewhere on the way up. We know which assets we're willing to invest in because we believe in the fundamentals that those assets provide, that in the future, they're going to be higher than where they are now. So the game we're playing is, what is the range in which we're willing to buy? So, and I'm speaking as if this is new for everybody, and I'm hoping it's not, but at one point, this was new information for me. Don't try to target the bottom and put everything in. It's like, no. Start accumulating when you think it's reached the bottom. If it continues to go down, thesis doesn't change. Continue to accumulate. If it goes up, continue to accumulate till you think the value is no longer there and there may be another asset that can be accumulated.
Yep, 100%. And so the one thing I wanted to say is, when it comes to GameStop, younger engineer, coworker of mine, got very lucky on GameStop. Very, very lucky.
Right.
And then kind of thought, chip on his shoulder, he's the shit. I've been there, man. I've been there. I'm sure you've probably been there too.
Yeah, no, I'm getting excited now.
But as the story continues to unfold, what ends up happening, right? You think you know what you're doing, so then you go, double down, triple down. Now you're just riding the volatility. There's ups and downs. In the end, he kind of gave up everything that he had made. Meanwhile, he went and purchased a fancy car. And it's problematic, but here's the thing. Everybody's been there, right? So one of the things from an investing point of view, I try to convey this to people, but it's so hard because you know, like the best lessons are learned the hard way.
Yeah.
Set rules. I have a set of rules, fundamental rules, and if you ask me how I feel about something, I could kick it right back to you if it pertains to one of my rules, because these were learned the hard way. Do not put money in that you think you're going to need to get back out in any sort of near-term window.
Yes.
By putting money in that you don't need to get back, that lets you survive the volatility. Mm-hmm. You don't need to worry about it because you don't need it. It's honestly just play money at that point.
Yep.
Put money into things that you believe in. Big time. That's why I hate index funds. Here's my thesis on this. Like, honestly, if you want to invest in index funds, I do not have a problem with that. As you said, a lot of people are lazy. They're great if you're lazy.
Yep.
But please, do not come to me and try to educate me on why index funds are the answer. Because for reasons that I've just laid out that go beyond making money, it's how you want to live your life. It's how you want your impact to be felt in this world.
Yep.
If you just want to be passive, afraid to take chances, afraid to make your point, do not try to educate me on my position, because it's more fundamental to why I'm here on this earth and what I'm doing here, and I have no respect for that. I'm just going to call it out right here and now. I'm fine if you do it, just don't have that chip on your shoulder like you know what you're talking about. I've got no respect for that. So
what I find interesting about what you said just there are plenty of people that believe in index funds. They'll believe in whatever. They'll believe in a pancake. If it works for you and is doing great, and you're gonna go buy fancy cars or do whatever from that pancake, fantastic, go about it. Don't know what value you're gonna provide to the world or anything, but good for you. But once you try to start selling that pancake to everybody else, yeah, I have a problem too.
Yeah.
That's kind of what it comes down to. But going back to Vecna, that's the arbitrary set of rules that we as humans kind of put out there, right? It works for me, it should work for everybody else, and that's just not true.
Right.
So the other aspect is, from what you said, there's two things I want to touch on. The first thing is, have a strategy, right? You have your set of rules. Your colleague, I feel for him. He didn't have a strategy. He was playing FOMO, which is something we should talk on. Is FOMO.
That's a fantastic point. No, honestly, it is, and this is why it's so hard. People say, you know, like, buy when there's fear, sell when there's greed. It's kind of not exactly that simple. Yep. I mean, it's a great thing to talk about.
It's what we're doing now. There's plenty of fear out there. If you've had the discipline to at least be somewhat liquid, you can continue to play.
The FOMO bit is real. So here's the thing that I like to just tell people, because a lot of people don't see this, that they could do this.
Yes.
A lot of people, they go, oh, this is going up. I need to make a decision now. I need to put my money in now because tomorrow it's going to be 10% higher. A week from now it's going to be 50% higher. An example, my own brother, younger brother, 5.5 years younger, not that in tune with the stock market, came to me and said, hey, what do you think about Rivian? It just looks like it keeps going up. Ooh. Dude, oh my God, we got to talk about Rivian. But I said, look, honestly, my personal evaluation, I would never touch it because it hasn't sold a car on the market yet, and it's got a value higher than legitimate automotive companies that move hundreds of thousands of units a year.
Yep.
It's not that it's a bad company, it's that $100 billion plus valuation on something that hasn't sold a single product is absurd.
Yep.
And I want to touch on that, but my brother was like, should I buy it? And I said, look, I want it, it's in my opinion, way too expensive to ever touch anywhere close to this price. But if you're interested, here's what I would do. Wait 3 months. Wait 6 months. If you buy it now, you're flipping a coin. Maybe you get 100% out. Maybe you lose 80%. If you wait 3 months or 6 months, you get a feel for what the market really thinks of it. You get to see financials, you get to see progress, you get to see if there's a legitimate business here or not.
Yep.
And then you can invest with some knowledge.
Because when he does invest his money, he shouldn't be investing money on an outcome that's 3 months. It's way too short.
I agree. Yeah, no, I know. Well, anyway, I don't know if you know what happened to Rivian, but
I know, yeah.
Yeah, it's like it's like $20 now. It was $160 at one point.
It was the same thing with SPACs, right? There was that Lucid Motors SPAC, CCIV, and I remember because I was at my cousin's restaurant. Everybody's talking about it. They're like, "You got to get in on this CCIV," and I was like, "Okay, what is it at? $30." Okay, what is it? It's going. It was still a rumor that Lucid was coming in, so that was the whole. Buy the rumor, sell the news. Exactly, right? And I want to say it went up. I watched it go all the way up to 65, and then the deal was announced. The deal was announced with warrants priced at $20 a share. Where's this thing going to come back down to? It came right back down crashing. There was a lot of people that were just holding bags, and the whole thing there is that was FOMO. That was 100% FOMO.
Okay, so you're gonna love this because I actually had this discussion with Matt Halfhill. People talk about crypto rug pulls, NFTs. We all know what a rug pull looks like,
yep.
At least in the NFT space. Someone with some hype creates a project, but they have no long-term objectives for it, so it's really just generate the hype, sell into it, get your liquidity event, and now nothing is going to happen, and when nothing happens, it just goes to zero.
Yeah. Let me give an example of that, just so everybody understands. So I'm a true believer in Web3, and I think Web3 is going to be the future, but that's probably 5 to 10 years from now. Having said that, going back to FOMO, what you just said on a rug pull, Netflix came out with Squid Games, #1 show. Everybody's watching it. Someone saw that and said, you know what? I'm going to make a Squid crypto token. And I'm saying these words in case there's anybody here that's not in crypto. So they made a token just like Bitcoin, Squid Coin. That thing went from 0, and I don't know the exact numbers, but it went up to like $250 in the matter of a week. And no one knows who started this coin. Whenever the trigger happened, within 10 minutes, it went from 250 to 0. And whoever made the coin was holding that rug, got everybody. Literally everybody. So that is a rug pull.
Right. So here's the thing that I don't think a lot of retail investors realize or stop to think about. But the way that Rivian IPO'd, in my opinion, the way that Uber IPO'd, there's this venture capital way of generating value where they invest in a private company, they give it a valuation, they bring other buddies in the area from other firms in the next series, and every series they step up the valuation. They're basically putting money back into their own pocket because every time they validate themselves with a higher valuation, they're generating more money for what they've held before.
Yep.
I don't know how it's gotten to the point where it's so ridiculous to me, like I said, with Rivian, where you can IPO. I don't remember the IPO valuation on the day of the IPO. I know at one point after it was worth over $100 billion. These people took a company that had never sold a product, did this whole hype train thing to it. Honestly, some of it's really funny because Amazon invests, then Amazon gives them an order for 100,000 trucks. It's like, you get a multiplier on the revenue you just gave to this company. It's hilarious. Everybody's into it. IPO, what happens? Liquidity event. All of the insiders get paid at $100 billion valuation. they make their exit, and
that's
who
it.
is left holding the bag? It is a rug pull of epic proportions that a lot of people don't even bother to pay attention to, that happens right in front of their face all the freaking time. And we talked about this as well, the idea for a company like Uber, where you could be losing money quarter after quarter after quarter.
They've yet to make a profit.
But if you grow the loss, if you grow faster, it doesn't matter that you're losing money. That's like an absurd business concept. The whole premise is based on a liquidity event. It has to be, right?
Yeah.
Because you can't change the culture of a company that continues to lose money if it grows to be $100 billion. There's nothing harder than changing the culture of a company. I've seen that firsthand. And to me, if this bear market does anything to get us back to core fundamentals of running a business for profit and making sure your balance sheet reconciles, that will be a good thing long term, period.
I agree with that. So it's actually kind of interesting on that. Kind of on a tangent. Company culture. Here's something that was interesting. My mentor, old mentor of mine, ex-Visa guy, a company with good culture. Actually, let's say this. A company with bad culture. Politics kind of is the reason for good or bad culture, right? A company with bad culture has 55% politics. What would you think a company with good culture has? And I have no idea what Uber has, and this is not so much about Uber.
Right.
But if we're going to make an investment in anything, and one is looking into investing in anything, they should try to peek into that. What is the turnover and kind of things like that? Or just, is the CEO crazy? Because that trickles down. So bad culture, 55%. A company with good culture, so let's take GM. A company that for decades have been known to have good culture. Politics is still 50%. The delta, 5%. Very, very slim. So in that regard, changing that 5%, that's how hard it is. Because we're only talking about trying to change a 5% from bad to good, a non-profitable culture to a profitable culture, whatever that may be. But implementing that 5% is extremely hard.
Right. All right, so we were interrupted by teenage kids with bass.
Yeah.
We were talking about company culture, right? So yeah, no, I mean, I've invested in a lot of companies, and I'll tell you, executive leadership makes a huge difference. Being in it for the long term as opposed to quarter by quarter makes a big difference, which is hard because a lot of bonuses are paid out within a calendar year. But you really need executives that will look past that, especially in biotech where horizons are 10 to 15 years out.
Or even in technology or anything of value, you want a CEO that has a vision that can execute. You also want to have a CEO that knows they can't do it alone and actually hire smart people and listens to their team. And then that generates a good culture. So just taking this publicly traded company that I advise on, CEO is fantastic in the sense that he has the vision to go out, and when he talks, it's literally like you can sit there and go like, wow, I can back this. That being said, one can argue he's trying to accomplish way too much. I see a bit of that. And what I also see is the company being a startup, stick to your guns, kind of like the investment thesis, and stop reacting to what, quote unquote, the market says quarter to quarter, because sooner, if you're just reacting, then you're not actually doing anything for yourself. So this is kind of the same thing. So we should transition from that to the uncertainty that we know everybody is facing. We talked a bit about our thesis and kind of our approach and some of the tactics in which we approach. Let's kind of talk, like, let me ask you this. So if nothing is safe, granted, we have our savings, we have our investments, we're riding on them. If one were to just be starting out, just got out of college, starting to save some money, like, what industries would you focus on right now in this downturn that would make long-term, long-term gains later?
Oh, so this is a question that I know I can answer for myself.
Yeah.
But I'd be very hesitant to necessarily roll out the red carpet and be like, follow me, guys.
No.
So here's the thing is, I think this gets back to what personally drives you. So as I disclosed in one of my previous videos, one of my first big kind of life lessons was losing $200,000 to SPAC capital in what became the premise for the television show Billions.
Yep.
The investment thesis there was that these companies, Elan and Wyeth, were going to have an Alzheimer's drug that potentially could be the first disease-modifying drug in that segment. And that's both very lucrative monetarily, but also significant in terms of impact to the world, right? If you could legitimately treat Alzheimer's or lessen the severity of the disease, it would be such a huge win for society. And I'm not going to pretend like, that was the fundamental reason I invested. I don't have family with Alzheimer's, knock on wood and thank God. But I like the alignment of purpose with something greater than just making money.
Yeah.
And so ever since that, even though I lost so much money in that event, I haven't been able to get biotech out from under my skin. And I've paid very close attention to a lot of what's happened. And I will say, my personal belief, biotech in general, we're looking at like 1983 for computers. That's where we're at. We're going to enter a new phase where we can modify the human genome, and then all bets are off.
Yeah.
I think 30 years from now, the future with what we look like and how we interact with the world is going to be so different in terms of actually modifying our DNA that it will be unrecognizable. And I think the companies that lead us forward there are going to be the next Google, Amazon, Netflix. That's my fundamental thesis. Now, as you know, I don't like to talk about hard companies, and there's a reason for that. When I do due diligence, it's gotta be clean. To your point, right? I believe so much of the world is run on psychology. What did you say the head of that company does that is bad? He reacts.
Yeah.
You gotta, if you know that you might react, you gotta clear out the noise.
Yep.
So I keep everything I'm actively invested in that I think is honestly high risk. Like if it turns a corner to a point where I'm like, I think this is a great investment for everyone, I will openly disclose it here. But right now, I know there's risk that I've accepted, and I don't want to bring people along for the ride if they really don't appreciate what that risk is.
Yep.
To my point, if the company were to issue a PR and I were to look at it and go, uh-oh, my fundamental investment thesis here is gone, I am unloading everything immediately. That's the other thing I learned. Never hold the bag if you know it's a bag.
Yep.
Get out as fast as you can and move on to the next thing, because it will only get worse. If you see it and you know it's shit, everyone will figure it out, walk away.
Yep.
So that's the thing is, and it's happened with companies, some I've gotten very lucky with where I moved on because the valuation got too high. I'll give you an example for one that I was in. A company called Sage. They had a drug for what was going to be multiple MDD, multiple depressive disorder. Prozac. It was going to be a Prozac replacement. They did head-to-head tests. It blew Prozac out of the water. Like, imagine replacing Prozac with something new, right? What would that be worth? Everyone was in love with this company. Overnight, went from a couple $100 million to multiple billions of dollars.
Okay.
I made good money off of it, not necessarily on the run because I didn't necessarily know about it, but there's a lot of money on offer if you can replace Prozac. So I invested, I want to say at 80, it went as high as 200. At one point it reached a valuation where I was like, this is too hot, I'm walking away. And then trial results came out and it was like, this doesn't work.
Oh wow.
And stock plummeted like 20 bucks.
Mm-hmm.
So they've recovered a bit. I honestly don't follow that story anymore because my thesis was broken.
Yep.
But that's kind of the risk that I accept with some of my investments, and that's why I don't like to talk about them when I'm actively invested in them. But in general, I think biotech is, again, at one of its worst bottoms it's ever seen. As an example, symbol LABU, it's a 3x derivative, which,
and
this is what people, I gotta say it. This is why people drive me nuts. It's like, invest in index funds, but hey, these are too boring. Let's go invest in the 3x derivative. Yeah, all right, so.
And this is not investment advice, by the way.
Right. So, just to give you a sense of how far the sector has imploded, the 3x derivative hit an all-time high, I think, 2021, early 2021, January, $160-ish. Trading at sub 5 this week.
Jeez.
Now, I know people, I mean, they're not like, I know them personally, but internet friends who have invested in this and who lost their ass and who tried to catch the knife on the bottom, thought 30 was good, thought 40 was good, thought 20 was good, and the market will continue to humble you. And that's why I hate indexes, because back to that, as an engineer, it's the +1 rule. You invest in an index fund, you're investing in everything, good, bad, ugly. You have to be able to at least, as an individual, say, you know what? Out of this pool, that's bad. That's just bad. Don't include that, right? All I do is I take that process as an engineer, N+1, and I run it all the way to the other side, and I go, you know what? I'm only investing in what I deem to be excellent. The threshold you have to get over for me to put money in is like 99%, probably more. I mean, I fundamentally believe with 100% of my heart for the stuff I put money into that it will be extremely successful long term.
And I think everybody needs to think that way. If you only get out what you put in, and if you're only putting 50% confidence, you shouldn't be surprised if it implodes, because you're basically giving yourself a coin toss.
Right.
So, aside from biotech, the things that I kind of see when I'm looking at this, right? And I mean, I have kids, so I'm trying to think about the future. There's more people in the world than ever. The older population is getting sick, and this is where a cynical dentist comes out. I'm like, everything to me is a machine, right? Business is a machine. And I fundamentally think business is a machine. So you have to put oil in the machine to keep getting the output you want. Sooner or later, and it was interesting, Vecna said humans are pests. Sooner or later, there's too much of us, and we need to somehow keep this machine going. There's food, there's housing, there's everything there. Biotech is huge because everybody gets sick. We're trying to prolong life, which is great. We need to somehow get this, right? Here's one thing that we as all humans know. I'm on a board, this is a true story. I'm on a board meeting this morning and yesterday where we're planning for a board meeting. So I'm with two execs, two really smart guys. One guy created the data room for one of the largest telcos in the world. The other guy sold his company to Google, one of the first companies Google ever bought, right? Just to say that. I have two very intelligent guys talking on the phone, and they're constantly, the problem is this, the problem is that. And here's what I took a step back just listening, going, okay, what's the solution? But the point that I want to make here is, we could have picked up two guys off the street and said, what's the problem with the world today? Everybody has an answer. Right. Everybody has a thesis.
Right, yep.
It's a very small portion that can break through that emotional barrier of, here's the problem, to, you know what? I'm going to bet on myself, or I can somehow contribute, even if it's investing in a company, to be a part of the solution. And I think that's something that I think just people in general could kind of learn. So there's that. And then there's a second thing, which is kind of interesting, related to this topic. We've all heard it. If it's too good to be true, it probably is. I don't believe in that. And
I don't believe in it at all either.
Right? Because if it sounds too good to be true, for me, all that means is you've intrigued my brain. And I'm going to investigate the shit out of that to where it makes sense in my head. Like I said, you have your barometer. I'm going to investigate it to where it makes sense to say, you know what, it's not too good to be true. I'm actually going to go in on it. And then it's, so that's that whole lazy or stupid thing. Oh, it's too good to be true. Going back to the lucky, and yeah, you kind of got me on a topic here, right?
No, I'm this is one of my favorite things to talk about, so let's keep going. Yeah.
So like people say all the time, like, oh man, you're lucky. Like, how did you get into music? Oh, how did you get into tech? Man, you were the first to monetize mobile for the NCAA. Like, whoa, it's not luck. I mean, there is right place, right time.
Right.
Nobody sees the hard work that went into it, right? So for me, and I think we've talked about this, luck is a mathematical algorithm. Luck equals opportunity times preparedness. Everybody at some point in their life, like you said, you only need 2 in a decade, opportunity. Lazy or stupid, how many people are prepared to take that opportunity when it comes? I'm gonna take my brother. Today's the 18th, by the way. Happy birthday. My brother John's birthday today.
Hey, happy birthday, John.
So, one of the best people I know in the sense of caring for his family. He's a hard worker. Works harder than a lot of people that I know. We talk all the time and he says, hey, can I get in with you on this? Or can we get in on that? Whatever it may be. And everybody else comes in and is like, oh, you're so lucky, you're so lucky. And I was like, look, you control yourself. You can put yourself in the right positions so that when the opportunity comes, go grab it now. And it's not about greed. It's not about I'm a square peg and the opportunity is a round hole. Some just aren't meant for you. But the opportunity that does fit does come, and you have to be prepared to take it. And then when you do take it, you need to have the discipline, like the discipline that you've been talking about here, to say, I'm gonna go all in 100%. Then you have the opportunity to realize, like fully realize what that opportunity has to offer.
Right. Yep.
So that's, I just had to kind of get that out because that's the chip on my shoulder. I do things for myself. Granted, we try to help people. We try to pass things forward, whatever that may be. Other people have chip on their shoulders and they brush us off and say we're lucky. And it's like, hey, to each their own on that.
All right, I won't go down that tangent because I know that I will end up making this video 3 hours long. But suffice it to say, I completely agree that life is what you make it, and the people, 99% of people who are legitimately successful had an element of luck play into it, but it was their persistence and their resiliency that got them there. And that's another two key, if there were two things that I say are the most important elements to long-term success, it is persistence and resiliency. And in this market where we're talking about people really feeling the pain, and it's funny because I can talk about it so candidly and not sad, if that makes sense. Like, and it's because I've been here so many times, and really, if you look at biotech and understand I was heavily invested in biotech, you know that I felt this pain this past year well before everyone felt it 6 months ago. I mean, if you really pull up charts, I've been here for a while, but I've also been here in the past. And so even appreciating that you feel a lot of pain, the point is you gotta save enough money out of your paycheck to take care of yourself, take care of your family. You gotta know how to balance a budget and spend less than what you intake. Yep. Fundamentally, the richest people on the planet who don't know how to balance a checkbook will always find something to spend their money on, and when the markets turn, they'll get in trouble. Yep. And I think we saw that with Zadeh.
Yep.
So get yourself straight first.
Yep.
And then the rest is just, to me, this is a great life lesson because this kind of teaches you like what really does matter, right? You got to put the roof over your head, you got to feed your family, but like, that's it. For me, that's it.
Yep. The
cars, the clothes, the shoes, push come to shove, I could give it all up. I'd be okay with it. My wife's got to be good. You know what I mean?
Yeah, I'm with you.
So, and I think, you know, if you're struggling to make ends meet, past that, I really feel bad. But for a lot of people who are watching this, I think that's probably not their reality. They'll be okay if they just, you know, you don't got to take that vacation, cut back on, you know, the gas consumption.
That's the FOMO. That's the FOMO. I need that vacation.
Right.
Right.
Oh my gosh, the Instagram culture, man. Don't. Instagram culture will bankrupt you.
Yes. That keeping up with the Joneses. You know, I think we've identified content for future episodes here. I'd love to dig deeper onto just biotech in general. Obviously, you spend a lot of time. I've not spent any. I think another thing that, like, just, you know, going with the cars, right? You've seen my stable, and I made a conscious decision. What was it? 2017, to say, you know what? I need to reprioritize my life. I'm approaching 40 at that point. I need to reprioritize my life, and got rid of it all. Not all, but got rid of most of it, and started investing that differently, not for my own ego or not for my own gratification, but went into real estate, and it's going fairly well for me. So I think we need to have a topic on biotech. I'd love to have a topic on Web3 because it's intriguing me to, like, no end right now. I think we need to have one on just psychology, where let's go pick some stories, or just some things that fascinate us, and how can we apply other people's learnings to that. And what I mean by that is, that's the resiliency you're talking about, right? Everybody sees mistakes others have, but then their ego says, like, yeah, I won't make that. Well, let's truly understand their mistakes, kind of like we did with Zadeh over there. And it's like, okay, now I know what mistakes not to make, and I know how not to make them. And I think that how part's super important.
Right.
So I think we should, I definitely would like to focus on that. I think those would be good topics to focus on.
All right, so I feel like this video is probably incredibly long. Now, let's work towards closing, wrapping this up, putting a bow on it. Did we hit all our topics? We had real estate, I think we touched on it. Crypto, yep. We touched on it. Equities, we touched on it. I don't know if we touched on inflation. Any thoughts on inflation?
You know, inflation is nuts. Everybody, so this goes back to, I think the reason we have inflation today is because, per Vecna, and I agree, the arbitrary set of rules made by not us, combined with the reactionary emotion that the entire world went through March of 2020 for the next, probably till now, the world is falling, we need to react, print 40% of the world's currency circulation in the past 2-3 years. What do we think would happen? I'm just kind of calling it out.
It's fair, but the flip side is, because is funny. It's like, I gave advice at the bottom to a group of people that I'm kind of proud of looking back, because it really was when the knife was falling, Dow was at like 18,000 and people wanted to completely sell out. And I was basically like, guys, you wrote it down from 30 to 18 and now you're afraid of the drop from 18 to 15?
Yep. You've
already taken the majority of the loss. If you sell out of your positions now,
you take a loss.
What are you hoping for? So this gets into buy, sell, hold. A lot of people are like, you know, if you're not buying, you should sell. There is no hold, but quite honestly, for me, there's a huge hold window. In fact, most of the time I'm holding.
Yep.
I'm selling if I believe I see a legitimate peak. Mm-hmm. I'm buying if I see great value in a bottom. And otherwise, I'm holding everything.
Well, I think that, so on that, to combat inflation, which, if you know it's coming, is to reprioritize your portfolio into things that can either keep up with inflation or buy you time so inflation hits, but then you got something big coming. Whatever that may be. Right. So that's kind of it there. And I think there's something you touched on there is the Dow was at 18 to 15. forget the number. It's not about the number. It's about your thesis on why you're holding or why you're not. Just going back to being repetitive here, right? If there's something, I have a thick head. Like, I tell everybody, look, I'm special. I know it. My mom told me I was. Right? I don't know if she was making fun of me or not, but I'll just keep it at that.
Hey, Dennis. Right now, we are the smartest people in the room.
Oh, yeah.
We're always the smartest people in the room.
Yeah. But in that regard, so in that regard, yeah, bottom line, we're going to wrap this up on inflation. It's constantly reprioritize, rebalance, and it's not about the number, it's about the why. Because if you're convicted in the why, and you're convicted 100%, if you're convicted in the why and you have the knowledge, because it's not pure luck, you've done the due diligence and you have your reasoning, ignore the number, because if your thesis is right and you did your homework, the number will shoot back up.
Right. So at the time I basically said, no point selling now. Don't know, there was a lot of uncertainty then. I mean, that's why it fell so abruptly. But at that point, it's like the bed was made, right? So what are you going to do? The best thing you can do is ride it out until certainty comes back, because typically the fear and the uncertainty is worse than the reality that comes to pass.
Yep.
Now, the flip side, so you said, you know, why did they print so much? Quite honestly, the federal government had to make a call and say, either we're going to support our own equity market or we aren't. And this was a too big to fail thing. They had to do it.
Yeah.
They stepped up to the plate. And it's a kick the can down the road, right?
Yeah.
And this is why, to me, it's so funny that we get all wrapped up in politics of, like, what party is in power. It's kind of like this situation got made well before the current president installed. Not trying to get into politics. I'm just saying,
yeah,
that whole nearsightedness element, right? These things come to pass as a result of decisions made long ago, not just 1 quarter or 6 months. If I don't have an answer for inflation, go ahead.
So the thing, just to continue that topic, I don't disagree with the need to print the circulation. As a business owner, we can go zero, we can go bankrupt. The government can print more money. Now, as a business owner, I can borrow money, right? But what I'm going to do with that starts that ripple effect of the future. And I think the way that we in general went about that, I personally was not surprised about inflation, and I did prepare for it. And that just goes back to the research and having that thesis.
Right. Yeah, no, I agree. I'm not surprised by the inflation at all. But it does kind of feel like if you look at where we were and appreciate how desperate things were then, it was a necessary evil. And however bad things feel now, imagine if you went into that pandemic and you really had no options for a job or where your money was going to come from to put food on your table or a roof over your head, right?
Yep.
Paying more for gas now, it hurts a lot, but it's not the same level of pain.
Yeah.
So, all right. Wrapping it up. I think we hit all the topics. You agree?
I think we did, yeah.
All right, so, big important thing, because I usually don't do this, and everyone knows this, but this was an experiment. It was episode 1 of Hot Talk, and it's really important. See, I didn't ask early, but if you tuned in and you're watching right now and you like what you saw, you gotta help us. And so, hit the like button.
Hit the like button.
Hit the subscribe button if you want to continue to see content like this.
And tell us your comments, like...
Right, and comment. Tell us what you think of this. Tell us if you enjoyed it, if you didn't like it, if it's too long, if it's too short, what topics you want to see, what else?
If we're all over the place, I mean, what topics would you want? How would you like us to curate this? This is a complete experiment.
Right, but this is also what we originally set out to do in a very roundabout way that ended up here. If you look at all the channel content and you go, wait a second, this is what they were trying to do, you might not see it, but quite honestly, this is what we love, this is what we want to do.
Yep.
That's why there's this hard sell.
No, that's very true. We are very fortunate, and I think that's just honestly our mindset. And at the same time, people gravitate towards us in conversation because we're always curious. We love to hear other stories. We'd love to have a guest. And we'd love to give our thoughts because we, like I said, we believe we're the smartest people in the room, and that's not saying we're...
Well, let's get smarter people in the room. That's the challenge.
That's the challenge, yeah. No, but it's... We only say that because I think we're rooted in common sense, and we believe in ourselves, and we have no problem
I know I'm not the smartest person in the room with respect to everything, but I do think we think about things differently. We both know that about each other, and we both very much... See, this is like the tricky bit, right? It's like that rap line, I forget what it is, like... I'm not cocky, I'm confident, so when you tell me I'm the best, it's a compliment.
Yeah.
That's how I feel. It's like, I put the work in to know what I know, and it's always like, I'm carrying the hammer in the back, so don't come at me, because I'll cut you down, because the due diligence is there, the effort is there, the years, the suffering, all the hardship, it's there to get me to where I'm at.
That's exactly it. And if we can't pass that on so people don't make mistakes, then we become what Vecna was describing as a pest, just doing it, creating arbitrary rules that we expect everybody to follow. And that's not what we're doing.
I'm not sure I followed that, but I don't need to. I think we're good. All right, so we wrapping this up?
Yep.
All right.
Thank you.
Thank you for watching, and we're gonna listen to what you have to say, and we will. You know the closing line. Have you watched enough?
No.
We'll see you at the next one.
There you go.